Spring is a season of fresh starts. Closets get cleaned out, garages get organized, and routines reset after a long winter. But while many people focus on their homes, their finances often go untouched because money habits tend to collect clutter just as easily. Welcome to Money Tip Tuesday from the Making Money Personal podcast. For many people, spring is an ideal time to reset financially. Life changes quickly at this stage, and small inefficiencies can quietly add stress or hold you back. A financial spring cleaning doesn't require perfection or dramatic changes. It's about reviewing what you have, cutting what no longer serves you, and optimizing what you keep. I'll call this the 3-step financial cleaning plan: review, cut, and optimize. Before you cut or optimize anything, you need a clear picture of where you stand. Think of this as opening all the closet doors before deciding what stays. With a clear overview established, let's begin the financial cleaning plan with step 1, review. Identify all income sources, like primary checks, bonuses, commissions, and any side income. Note any recent changes, such as job switches or raises. The key is understanding what actually comes in each month, which sets the foundation for every other decision you'll make going forward. Next, review your monthly spending patterns. Check where your money goes each month. Scan the last 2 or 3 months of transactions and group expenses into 2 categories. Your fixed expenses, which would be your rent, mortgage, childcare, insurance, and variable spending, which would be food, entertainment, or any convenience purchases. Don't be alarmed if your variable expenses over the last few months come in a little higher than you thought. Winter often brings higher spending, and habits formed during busy seasons can linger a little longer than expected. Next, you'll want to check your debt balances. Make a list of all debts: credit cards, student loans, and auto loans. Record current balances, their interest rates, and their required monthly payments. And don't get discouraged if your total debt balance gets you a little down. This part of the review is not about judgment, it's about awareness. Finally, review your savings and emergency funds. Check what you have set aside for unexpected expenses. Will your fund still cover many of the more common emergencies? Can it help out with an unexpected job loss, a sudden medical emergency, or a quick home repair? As life changes, families grow, or careers evolve, the savings targets need to evolve too. Okay, the first step was review. The second step of our 3-part plan is to cut. Start by identifying what's no longer serving you. Once you clearly see where money goes, cutting becomes easier and less emotional. Start by reviewing your streaming platforms, app subscriptions, gyms, and delivery memberships. Remove or cancel any that haven't been used recently. As income increases, spending often quietly follows. Look for convenience costs that may have climbed during hectic seasons and any spending that doesn't align with your priorities or values. Reduce any high interest costs. Identify high-interest credit card balances or unnecessary fees, and cut what you can to create relief. And finally, eliminate overlap. Identify multiple savings accounts, outdated insurance coverage, or redundant financial tools, and remove those that might be adding confusion to your financial plan. All right, now we're on to step 3, optimize. Improve your finances so what remains works better for you. One of the best optimization strategies you can do is to automate your finances. Set up automated savings transfers, bill payments, and retirement contributions. The best part about this is that all you have to do is set it once and then let it run. You'll also want to review your savings goals. Adjust your emergency fund for lifestyle changes. Update short and long-term savings priorities such as travel, home projects, retirement, or education. And use an automatic savings tool to adjust the contributions to those funds. Optimize by improving your debt strategy. Ask whether your current repayment plan still makes sense. Could refinancing lower the interest rate? Should higher interest balances be prioritized more aggressively? Does your strategy match your current cash flow? Would a debt consolidation move help? Make the right adjustments to answer these questions and consider taking steps toward active debt refinancing or consolidation if needed. And finally, take the time to optimize any of your employer benefits. Take a moment to review your retirement plan contributions, any HSA or FSA use, and insurance choices. confirm you're making the most of what's offered to you. To wrap up, you don't need a complete overhaul to feel in control. With review, cut, and optimize, head into warmer months with clarity and confidence. In spring cleaning season, your finances deserve some attention too. A little cleanup can leave you lighter, calmer, and more prepared for the future. If there are any other tips or topics you'd like us to cover, let us know at tcupodcast@trianglecu.org. Like and follow our Making Money Personal Facebook and Instagram pages, and look for our sponsor, Triangle Credit Union, on social media to share your thoughts. Thanks for listening to today's Money Tip Tuesday. Check out our other tips and episodes on the Making Money Personal podcast.